God, I just realized just saw myself on camera and I just realized that like this goatee I have is gray. I got to get rid of it. I look like a completely old man with this silly goatee. Anyways, welcome to new viewers. Thanks for tuning in. We are here at this moment to watch the opening of the futures because, as we know, the futures open at 6 o'clock on Sunday night. So hope you've had some little rest over the weekend and haven't thought too much about the stock market. We saw that down move stuff last week, and I think it's pretty clear in everybody's mind that this is not like all over, that there's going to be other legs to this stuff, and it's not clear what's going to happen, right? Certain people probably think it's clear, like, oh yeah, it's definitely going lower. Oh yeah, the market's definitely going lower from here, or it's definitely going higher. But as traders, we have to accept that there are certain things that we know and certain things we don't, and we don't know where the market's going to go from here. So my thinking was I would just kind of outline some of the strategies that I use to short volatility and kind of talk about my sort of long-term strategy from here to make money moving forward in this market. But I also just want to highlight a couple things for the American audience out there about this stimulus bill to do with your retirement savings. And that has to do with your 401k. And what they've done is they've relaxed some of the rules to do with your 401k. Hey, what's up, Eric? Yeah, thanks for tuning in. What's up, Adid Yo If? Anyways, and I know a lot of people are not in the U.S. that are watching this, so I'll make this quick. Basically, you're going to be allowed to take money out of your 401k without penalties, A. B, you're going to, or with less penalties than usual. B, they've extended the amount you're able to borrow. So before you could borrow up to 50% of your 401k or $50,000. Now it has changed to that you can borrow the lesser of 100% of your 401k or $100,000 from it. Also, there's like a mandatory amount that you have to take out of your investments if you're over a certain age that has been relaxed for the year. So you don't have to take money out if you're over a certain age. Now, you're allowed to take money out of your 401k. Usually, a lot of jobs won't let you take money out of your 401k unless you are you leave the job. But if you give a reason that has something to do with coronavirus, then you are allowed to take out stuff of your 401k. So that's kind of a cool thing if you need it. I know some people out there, like, they have a lot of money in their 401k, but they have no money elsewhere because they've lost their job or whatever. So this is helpful. Also, as many people, and has been reported, people are getting $1,200 per adult in the United States. But in addition to that, people who are furloughed or who are on unemployment, in many cases, are going to get an additional $600 per week. So stay tuned as this stuff becomes more public knowledge and gets hashed out more. But good news if you're stuck. Now, of course, I would not recommend taking money out of your 401k unless you absolutely have to, because, life goes on and you don't want all your investments just totally destroyed at the end of this. So there's that. All right, so let's get back to volatility, the VIX and whatnot. And the first thing I'm going to do, and people who watch a lot will be used to this, but we're going to take a look at the shape of the term structure here. Now, VIX ETPs like TVIX, UVXY, VXX are based on VIX futures. They're not based on the VIX. There's no way to directly trade the VIX, and thus you can't base these products directly on the VIX. So what we have to do is we have to use the futures, and the futures don't behave the same way as the VIX. And so what we do is we have to watch the way the futures are behaving. Now, this doesn't predict what's going to happen for us. It just tells us where we are and what the potentials are right now. So if we look at VIX Central here, and I just pulled it up, this is going to show us the term structure. Now, VIX Central doesn't have a monopoly on the term structure. There are other sites that have this information, but it's a free site. It's generally delayed, this site, by 15 minutes. Now, currently the VIX is not trading. VIX prices won't update right now. So the prices of the futures are accurate, but that top line that's the VIX price is not accurate. And right away, you can tell that something is not normal here, because usually the futures are all above the VIX price and the futures are sloping in the other direction. This is an inverse chart, and this to us means that we are still in an elevated spike type situation, and the usual decay that helps us being short volatility does not exist. Now, products like TVIX that's leveraged exhibit decay themselves in what I like to call beta drift, but the unique thing about VIX ETPs that usually makes them decay is not happening right now because we are in backwardation. And the only way that we're going to get back out of backwardation is for volatility to come in. Now, we've talked about this before, and I've repeated it before, but we don't know what the market's going to do, and the market is not satisfied with what's happening in the United States right now. And you can tell that because we have an elevated VIX. And thus, we need to continue to be careful with this elevated VIX up here. It's not a time to, it's very unpredictable what's going to happen, which way stuff's going to move. And I would recommend to people who are interested in exploring a short vol strategy that you may want to sit on the sidelines until stuff gets a little bit settled, until volatility comes in a little bit, because it's unpredictable what can happen. Certainly there's a chance that we could revisit the highs in the VIX. I think it's unlikely. I think for us to revisit the highs, we would need some sort of situation that was very dire indeed. However, the situation can kind of stay where it is right now, and that is unpredictable. The market can make new lows without the VIX making highs. But, as far as what to do tomorrow, what's going to happen tomorrow, I know there's new people on here who are tuning in and thinking that they're going to get some sort of guidance as to what's going to happen tomorrow in the markets. And, well, we can see the futures are open right now. E-minis down 36, the NASDAQ down 100, Dow futures down 287. Now, although this is down and the markets are down, it doesn't, have all that much meaning, because last Sunday stuff was down, and by the morning the markets were up. So Sunday night, it gives you some clue, but it's not for sure. A and B, we don't have that limit down thing that we've had before. So, if you're looking for the volatility to expand and like TVIX to make new highs or something, we don't have the market down all that much compared with other times. You remember we had in 1 week several limit down sessions in a row. So compare with that, the E-minis down 39, and let's see what that represents in percentage terms. 1.54% isn't that big of a deal. So I guess I'm continuing to make a case to be very careful being long volatility, especially your TVIX or whatnot. Now, if you look at my video from last week, my videos, you'll see one person came on there and commented and said, Dave, I listened to you on Thursday and I got out of my TVIX, and now TVIX is back up again. So, kind of saying that I made a bad call there. I don't like to make calls in the market, because anytime you are trying to predict what's going to happen in volatility like the next day, it's a pure guessing game. Anybody's guess is as good as mine. However, in that case where a person was, sweating, can't sleep because their position's too big and they've lost money, anytime you're in that kind of situation, you want to take off some of your risk so that you can sleep. And so, you tell a person to sell, to lighten up on their position, and then it goes against them. You can't turn around and blame me, because it's ultimately up to you what to do. You take in whatever input you have, whatever stuff you can look at, whether it be news stories, charts, what other traders are doing, order flow, volume, all this kind of thing. and you make the best decision you can. But going back later and trying to blame somebody else is not the way to do things, because if you don't actually take responsibility yourself for things that go against you, then you're not going to learn the lesson and be able to trade better in the future. Now, something going against you one day doesn't necessarily mean that you made a mistake. Everything that loses money is not automatically a mistake. Sometimes stuff just doesn't work out. And the longer you're in the trading world for, the more comfortable you'll get with that. I remember as a market maker, my profit and loss would bounce around by like $100,000 a day. It would be up, down, all over the place because I had so many positions on and all this stuff going on. And there's a certain amount of volatility in your P&L, which you kind of have to roll with. But if you are in a situation where you're totally stressed and some huge trade is going against you, then I don't think it's a mistake to lighten up a little bit. Even if it goes against you the next day, that is a plan that you put into play, and you see what happens. Now, once again, those who are joining right now, the futures did open. The E-minis are down 35, NASDAQ's down 91. It looks like we're slightly off the lows. You know, it would have been there was a time when like E-minis down 33, it would be like, oh, the end of the world. But nowadays, that's like, oh, it's not down that much. It almost feels like unchanged, down 33. You know, Dow down 260. It's like, oh, big deal, down 260. So we'll see what happens from here. You know, my feeling is that if stuff kind of calms down like it has been, that volatility will erode. But as long as we have this big spread between the VIX and the futures, right now the VIX, on Friday it ended 11 points between the front month future and the VIX. And remember, we're not right after expiration anymore. So we've got a little over 2 weeks till expiration, and as we get closer to expiration, there's going to be more and more pressure pulling up on these futures if the VIX doesn't move lower. So continue to monitor the spread. What we'd like to see for those of us who are shorting volatility is that the difference, you know, another name for a spread is just difference. The difference between the futures and the VIX, we'd like to see that get smaller and smaller. That would be progress towards this this term structure straightening itself out and sort of righting the ship. So that's what I would be looking for, is for this term structure to right itself and the VIX to move lower, the markets to calm down. But it's really going to just depend on how much the market moves around. If we keep getting the swings we've been getting, the VIX is not going to come in. And so I would be careful. However, if you look at things in a more long-term type approach to things, we are in an elevated area of volatility here. We don't know how long it's going to last for, but we're in an elevated level of volatility here. So if you were to put on a trade shorting volatility that is far out in time, when things come back to normal, you're going to make money. And so let me give some examples of something that I might look at to make this trade betting on the fact that stuff is going to come back to normal at some point. Now, when would we like to put this trade on for? What's a good time for us to consider? And I'm looking at options trades now, so I'm not going to be looking at TVIX. See, I don't like shorting actual stocks because the higher they go up, all of a sudden you're forced to cover, whereas with options trades, you know how much you can lose. So let's go to VXX. And the other one we can look at is SVXY, but let's just take a look at a chart and try to figure out where this could go if volatility comes in. And we know volatility is going to come in at some point. It could be next week. It could be 3 months from now, but it's not going to stay up at 50 forever, and certainly not going to stay up at 60 forever. So let's pick a time to put an options trade on, and I was thinking like out in September. Now, obviously, the closer you get to expiration, the more bang for your buck, but I like to put a trade on and then just leave it. And then whenever it is that volatility comes in, we know it's going to come in, but whenever it is that it comes in, you've got the trade on, you're ready to go. So maybe September we might look at. We could even look at next Jan. I probably wouldn't go too much farther out than next Jan because it starts to get funky with these really far out options. I'm not a huge fan of going way out on leaps. But and that's another name for long-term options is leaps. But as I look here, right now, VXX is 52, 51. We could go and look at something like the 35-30 put spread, something like that. It's certainly reasonable that this can get back to 30 in the next 6 months. So if I were to buy the 35 put and sell the 30 put, so it's a $5 spread. It's showing here you could buy it for $250. So $250 would be directly in between the two strikes, right? Half of $5, and that would represent being able to double your money when this goes back below 30. So 258 is pretty close to doubling your money, but you may have this trade on for a while, and but it's something you want to put on and just leave. It's kind of in that set it or forget it strategy. Now, I know there's many of you out there that want to play things shorter term and are more interested in making quick bets on volatility. But, I'm here to tell you that it's very hard to figure out what volatility is going to do minute to minute. And, it's hard to predict what's going to happen tomorrow. Yeah, the markets are showing that maybe we'll open down tomorrow, but things could switch around very quickly. I just wanted to mention also that I do have an interview with David Modell, which I taped on Friday, which I'll probably release maybe later tonight or something. I was going to fit it in here somewhere, but I think I should just put it in its own separate spot. But I sense that there's people out there, a lot of people join this channel based on TVIX, and I sense there's people that are still holding TVIX and thinking like possibly happy that we got this little move up. And, TVIX over 400 now again. But I would, once again, be very careful with this. It's not going to be a surprise when that rolls lower. So you're living on borrowed time if you're long TVIX right now. So I would consider lightening up once again. And, of course, somebody got mad at me. I was telling people to lighten up when it was 300. Now it's back to 400. But still, you're living on borrowed time. So I would be extremely careful with TVIX. All right, let's go to the chat for a second. Yeah, I don't know about this gray facial hair thing. I don't think that's a good idea. All right, I got my chat up here. Is UVXY going over 90 again? Let's take a look at UVXY really quickly here. It certainly could. Remember, it's all based on the futures. And right now, with the futures and backwardation, UVXY could certainly go above 90 again. It's not out of the question. However, you have to ask yourself, if you're long UVXY, why am I long UVXY? Just because there's a shot that it might go over 90 again? It seems like if you're just holding on to these products like over a longer period of time, you're just kind of taking a shot that, oh, well, I guess volatility is going to go higher at some point. And, it's better to take that kind of shot. Well, if you're delta neutral, then you're not really taking a shot, right? You're flat. But if you're thinking about getting long volatility, this is not a bad time to be doing that sort of thing because we don't have those huge things that are pulling these products down. In most times, 80% of the time, we have these contango pulling these products down and decaying these products rapidly. We don't have that right now. We have basically the forces pulling these products down are neutralized by the forces pulling them up because we're in backwardation. So so it makes a little more sense if you're going to make a bet to go long volatility to buy TVIX or UVXY now than it does during normal times. However, that being said, be extremely careful. Like I said, I've said it before, my rule of thumb is don't hold on to these products more than 48 hours at a time. If you really think that, well, your analysis of the situation is, well, the stimulus went through, now that's all the good news that the market's going to have. Everything from now is going to be bad news for a while, and I'm going to stay long this stuff. that seems like a legitimate trading strategy to me. However, I wouldn't stick in. The longer you hold on to these products, it's like a hot potato, UVXY or TVIX. The longer you hold on to it, the more likely it is you're going to get burned at some point. So I caution you to be very careful about it. Let's see. Both products are not, TVIX and UVXY are not currently leveraged at their normal rates. Both are at about 1. I don't know why you're saying that parallel elk. Both are about 1 to 1.5, 1.2 times. Of course, TVIX has more leverage than UVXY. They're not of equal leverage. And so I don't know where you're basing that thing on parallel elk, but I would beg to differ with you on that one. In normal times, the leverage for TVIX is 2 times. Now, all the time, a 2 times leverage fund is not going to perform as well to the upside as it is to the downside. So a 2 times leverage fund, it might like to the upside perform at like 1.9 times, and to the downside perform at 2.2 times the leverage. But the products don't have like, they don't change how much leverage they trade with from day to day based on market conditions. It's a very formulaic the way it works out with the future. So they're based on, well, it depends which product, but the TVIX is based on an index, and they make markets around the index, and it's very organized. It's not like, well, the leverage just disappears. You're kind of describing something like what happened with Dust, where they were unable to hedge it one day, and they made this big announcement with that. That's not the case with TVIX. I think there was some confusion because the marks were bad one day, so that some of them get marked at 4:30, some of them get marked at 4 o'clock, and so when you look at the prices, it looks kind of messed up. But rest assured that it's not like TVIX and UVXY have similar leverages. One is 1.5 times and one is 2 times. Let's see. Doesn't it seem that things should calm down with the VIX? I don't know. It's hard to tell. The VIX is at an elevated level still. It seemed the last couple of days like stuff has calmed down. It doesn't seem like it's moving as rapidly, and it would make sense that we should come off of this level. But until the VIX actually does come in, I'm not going to be sold that it's calming down. We could certainly stay. I don't think 65 is calm at all. I think if we get back down to 40, then you can make the case that stuff's calming down. We're off the highs, but let's take a look at the VIX chart for a second here, actually. I mean, you can make the case that, like, well, the immediate danger is gone. The country has sort of mobilized in the U.S. and has made a plan. They've put this stimulus package, has made it through Congress, but we still have cases exploding. We still haven't reached the apex of this. We don't know what the future is going to hold. So I would still urge caution once again until the VIX gets below 50. I certainly have short volatility positions on right now, and I plan to just hold them for as long as it takes for this stuff to go back down. We have a Alfie Zhang. We have a Facebook group. I don't have a Discord right now. We're just using we're just using the chat here. But we have a Facebook group. It's got 1,600 people on it. There's people there to help you at all times. So check that out. If there's interest, we might get a Discord group. I'm very wary of these people that like charge money to go on Discord and all this stuff. And I don't want to have people feel like they have to pay money to participate in this group. I want it to be, as cheap as possible for people to check it out. So anyway, I generally trade to the short side with the VIX, and I'm looking for, if we get a pop this week, I'll be looking to short volatility, and I'll be doing things like buying put spreads. Another thing you can do if you have more capital to deploy is you might consider actually selling out of the money calls in UVXY. Now, this is a little bit more risky of a strategy, but if we look at UVXY here, and I get out of the way for a second, okay, UVXY is 70 now. And if you look, like, to some of these calls are pretty rich, like the June, you can go up to the June 100 calls, right? And you could sell these for, $1,700 a piece for the 100 calls, right? So if we do, it seems pretty likely that we move lower in the next 80 days, and you can sell each call for $1,700. That seems like a pretty good deal to me, to just sell some of these calls. And if you want to be less, take less risk, you can move up to like the 200 calls. It's even less likely that things are going to be up at 280 days. Now, a safer way to do this would be to turn it into a spread. So maybe you sell the 90 call, but just in case, you buy the 180 call against it, or you buy the 150 call against it, or let's say the 145 call. You're still collecting a decent premium here, and all you need is UVXY to stay below 90 in 80 days. So called credit spread. The way you could limit your losses, fighter, is to buy a call against them, and I would do something to limit your losses no matter what. The other thing you can do is, if you sell like these 90 calls, right, you can go ahead and you can go into the front week options, and you can go ahead and buy some cheapo stuff. Or maybe you don't do the front week, maybe you do like 19 days out, and you buy some cheapo stuff. Maybe you buy the just something to protect you a little bit. Maybe you buy the 95 100 call spread a couple weeks out. I would be careful, naked shorting stuff, because it is extremely risky, and I don't want people taking a huge amount of risk, and then because the last thing I want to do is have people lose a lot of money. So I would recommend just sticking to credit spreads for now. They are definitely risky, certainly. We could go to 300, but it's going to be pretty hard for us to get to 300 in UVXY. Certainly, stuff could happen. There's no doubt about it. But for this to get 3 times as high as 100, we saw, even when the market's like down a lot on the day, it was very hard to maintain that 80 vol. So essentially, the higher we move in the VIX, the harder it is for it to make those additional moves higher. So it's certainly risky selling stuff. In any way you look at stuff, you're going to take a risk. But I would argue, in a sense, that it's more risky being long volatility in some of these areas than being short it. Now, once again, my advice, as far as in the play I'm doing, is I'm taking limited risk, and I'm buying put spreads far out in time. That way, I know what I'm paying. Like the example I made with September, it's a $5 spread. I know I'm paying $258 each time I put the spread on. The most I can lose is that $250. The most I can make is, 500 minus 250, which is 250, or in the case with that one, 242. And I like that kind of trade, because I can wrap my head around it. I know that, well, worst comes to worst, maybe this spikes for a couple weeks, and all of a sudden the trade is marked against me, and it shows it only worth $150 instead of $250 for a couple weeks. But I know in those 80 days, things are going to go back down. Or this one, I'm giving an example out to September, 173 days, I know the stuff's going to go back down. This is Trump's speech. I don't like to talk about politics on here, because I know people have different views. But I would just keep an eye. It seems to reason to me that stuff is going to slowly slow down, that volatility is slowly going to come in as people focus on other things, and as stuff slowly starts to, the situation is slowly going to get under control one way or another, and we're going to reach some sort of apex, and stuff is going to start to come in. Does that mean the market's going to go straight up? I don't think so at all. I don't think we're going to return to the highs, and even if the virus is like contained and everything, we could still stay down here in the market for a while. So I'd be really careful. There's trading opportunities. I would take those opportunities. Like if you trade something in a stock, if you buy something, I would get out of it when it shows a profit, and make those quick profits back and forth. But I don't see us like making new highs in the Dow or something like that, because all this money has to come from somewhere. And you say, okay, we're giving a check to everybody. Yeah, but all that really is doing. I saw this thing that said that like this is costing $6,000 per person in the United States, the bailout. And so where does that money come from? Well, they borrow it, but it ultimately hurts us. Alfie, let me put a link to the Facebook group in for you. Yeah, it's pretty cool. And the thing I love about the Facebook group is that there's a lot of people on there to help out, and it's not like the David group. It's just a group of VIX traders, and the only way I'm really related to it is that I started it and I help moderate it, but it really has a life of its own, and I'm not like the main player in it. I just kind of started it. I'm going to put a link in the chat for you here, right there. I have a custom URL, VIX trade. But there's opportunity out here with the markets and nobody knowing what's happening like this. That is where opportunity is. So I would look in individual stocks. There's option trading strategies, and I'm going to outline on this channel as we get into earnings period some strategies. And let me go through some of the tools I use to find high volatility option plays in stocks for those of you who are newer here. I like to look at this site called barchart.com. So let's take a look at that really quickly here. And what they have is they have a section under options called highest implied volatility. They also have change in volatility, but highest implied volatility, it'll basically just catch which stocks are the hottest. And what I do is I really kind of filter out this list, because what I'm looking for is stocks that have higher prices. These dollar stocks, yes, it has a high percentage volatility, but there's not a whole lot of meat on the bone. We want higher price stocks. So go through here and I look at different stuff. And when we come into earnings, there's more stuff here. So let's see, there's one RCL here. And it just gives you names to kind of look up on here. And the other thing is some of these stocks, we can sell volatility in some of these stocks in a similar way to what we're doing here. Let's look at SVXY. We haven't looked at that in a while. Now, SVXY is the 0.5 times leveraged product for the VIX. And SVXY came down from basically 70 to where it is now. So we're thinking it's going to come back at some point, in the next 6 months. It's going to come back to like 50 or 60. As soon as we get back into contango again, then this stuff decays, and inversely, this is going to move higher and get pulled higher. We don't know when that's going to happen, but if we were to go like farther out in time, I have butterflies on in this, but if you were to go farther out in time, we could look, and there's wide markets right now, but we could look at maybe buying some calls in here, or maybe even selling some put options in here to take advantage of this move back up in SVXY. The other thing I've been looking at is just Tesla. Tesla's kind of reached a happy medium, and I know there'll be people that have different opinions than me in here, but we can do a condor where we're saying, well, Tesla is going to stay probably in a certain range. And as volatility, remember, as the VIX goes down, the prices, option prices levels on individual stocks are likely to go down as well. And it's going to depend on where we are in the earnings cycle and whatnot. But when we look at Tesla, a volatility over 100 in a $500 stock represents a meaty amount of volatility. There is money to be made out here in Tesla. And if you look just simply on looking at like selling put spreads, for example. So Tesla's 500 right now. If you were to sell like the let's just give an example of like the 320 290 put spread. Now that's a $30 put spread. It seems pretty unlikely to me that Tesla's going to go below 320. And what you could do is you could sell this put spread. Now, remember, it's a $30 put spread, so you can lose $3,000 minus whatever you sell this put spread for. However, it seems pretty unlikely that Tesla is going to go below 320 in the next 26 days, right? So this is something you might want to consider. And the thing is like any buying power that you use on the downside. So if we're taking $3,000 in buying power risk on the downside, we can use that same amount of buying power on the upside, and it costs us the same amount of buying power, because the reason why we can double up our use of buying power is both things can't happen, right? We can't both be below 320 and above 320 at once. So we can creatively use our buying power in something like Tesla to both sell a put spread way out of the money on the downside and sell a call spread way out of the money on the upside. So we could sell that one put spread, and then we could go up higher here to, let's say, it's 500. Let's say something like the 670, 700 call spread. So now I've sold one put spread and one call spread. I'm collecting $700 each time I do this. And once again, the most I can lose on this trade is $3,000. So I'm betting $2,300 to make $700. Now, the reason why you don't make as much money as a more risky trade is because the odds are you're putting the odds highly in your favor that this trade is going to work for you. And that's why you don't collect as much money as in other trades, because the odds are on that this trade's going to work, but you collect a little less money. So you have to be careful, Let's see. You believe the Fed's killed the ETF markets. No more breaking 3 standard. Well, the thing is like that whole thing with like these circuit breakers has really does serve to stifle volatility, because it can only get so volatile and then it just stops, right? So the circuit breakers seem to have been pretty effective at stifling volatility, and I just think people are going to get tired of chasing this stuff up and down. The Dow up 2,000, down 2,000, up 2,000. I think traders are just going to become a little bit kind of numb to this whole thing, and just they have a hard time keeping up this like fast pace of buy it, sell it, buy it, sell it. And for that reason alone, I think volatility is going to come in. I don't want to like make, I'm more conscious now that there's more people watching me, that I don't want to make these big sweeping predictions and then be completely wrong and fall on my face and have people look at the video like a week later and see me be completely wrong. However, vol is going to come in at some point. We don't know when. So my idea, once again, is to short volatility a little bit farther out and wait for the crush. It hasn't worked for me shorting stuff in the short term very much, because you get a pop and all of a sudden you're like losing money and you run out of time. So that's why I'm talking about being a little bit more conservative with stuff. So let's see. We're on the lows. Let's take a look at the chart since we came out here. Showing down 1.6%. So not a huge deal here. As far as what we've gotten used to lately. It seemed like we definitely rallied in my mind, quote unquote, too much last week. It seemed like it was kind of overdone, the rally. We'll see if we give back more. But, volatility has stayed pretty heavy. And, when we look at this chart, even if we go down to 2,400 and we just hang out here, still, the downtrend is broken now, it seems. And we might just be in this never land of just kind of moving sideways here for a while, which would mean volatility will come in. Let's take a look at Boeing for a second. See, for me, dead cat bounce is getting used too much as a thing. I wouldn't describe this situation as a dead cat bounce. Dead cat bounce would be like it sells off and isn't able to rally again. This to me looks like it rallied way back and now it's giving back a little bit. Dead cat bounce is like you throw a cat off a roof and it just lands on the ground and stays there. Right? There's no bounce, right? I think that Boeing, it seems like people went crazy buying this up, and I certainly wouldn't be a buyer up here myself. Once again, let me just state very clearly here. I've made a lot of money trading options in my life, but I'm a terrible stock picker. So don't take my advice on stocks. Find somebody else to give you advice, because I'm going to be wrong no matter what I say on stocks. But just looking at Boeing and the fundamentals of it, there have to be people actually flying on airplanes for Boeing to make money and get new orders. And it seems like the airline industry is going to have a pretty long period of not a lot of air traffic, right? I mean, I know as far as I live in a resort area here in Cape Cod, and all the foreign kids who usually come here for the summer aren't coming. Tourism is going to be way down, for a long time. So betting on an airline seems like, I don't know, it just seems like there must be a better thing you could bet on than the airlines. And this huge move that Boeing's had, I don't know, I don't like it. I would be more of a seller than a buyer here if you put a gun to my head. But like I said, there's better people than me to ask about this sort of thing. And we're continuing to give up here. We're showing VIX futures up a little bit as we, and we'll see what happens tomorrow morning. My hope for this group is just that we can kind of, as a group, come to some sort of consensus on how we feel about different different levels here with volatility and with the market and with what's going on forward. It can be helpful just to have some other people to listen to when you're looking at the markets, because when you're isolated in a house and the other people in your house don't care about the stock market at all, or you try to talk about the stock market and they're like, whatever, man, I don't care about that, or they want to talk about other stuff, it can be refreshing to have people who are really actually into it to go and commiserate with. And I'm certainly very into it, but I don't like the fact that these futures are so much lower than the VIX still. It's very frustrating that this situation hasn't righted itself. If we look at the VIX Central once again, there is a chart which my buddy Edward always likes to look at. And this gives historically when we're in contango and when we're not. And, we've spent a decent amount of time in backwardation already, and it usually doesn't last this long. So I would be very happy if we could come out of this, because the quicker we come out of this, the quicker these products can resume their downward trend. But look at this. So anything underneath the red line is backwardation and is bad for long-term decay. And, we are just way below there. We have been for a while, since February, right? So, we were looking great back here in December. And, we're just massive still. We're still in backwardation. It's not fun. Until that switches around, we're still kind of in a crisis as far as volatility. And the usual ways that I make money are not going to be that effective right now. So it's a little frustrating, certainly. But I know that's just the way it is, and we just have to kind of wait it out. I have cash on the sideline, which I want to put to work, but I don't just want to take shots. I want to kind of wait until these charts have righted themselves, and so that we can resume a nice downward move again. But patience can be hard. It's hard to be patient. It's hard to, you come in and, you come in tomorrow and you want to like do something on Monday morning. You're like, I want to do a trade. Let's make some money. Let's make it happen. Come on. The markets are moving. Let's do it. And sometimes it can be very difficult to be patient, but that's really what it takes to make money long term in the markets is patience. It's a skill that you have to develop over time. And there you have it. All right, so I'm going to post the David Modell interview. Would I think it's too expensive? I mean, I could certainly see people making a bet on the VIX going up and it happening. I could certainly see us leaking back down lower this week. My advice is just that if you're going to play that game, just be very careful with it, because we know volatility is ultimately going lower. Now, it might not happen for a month. It might not happen for 2 months, but it's going to happen, and it might start happening this week. I could certainly see it like, we reached the height of this kind of thing in the U.S. to some extent. At least we stopped doubling. I mean, we had like Thursday, Friday, they were like, oh, there's 40,000 cases. Now there's 100,000 cases. And then we went from 100,000 to 125 the next day. So instead of going from 50 to 100, we went from 100 to 125, which seemed like, well, maybe we're not doubling anymore. So it's kind of everything's based on these events. Am I surprised we're not limit down yet? No, not really. I like it that we're not limit down. I think that there hasn't been some huge news story that's come out to make us limit down. Maybe we might go limit down overnight. Who knows, Mr. Tripoli? But as long as the VIX is really high up here, anything's possible still. I know it's funny on the weekend. It's like normal people are like, here comes the weekend. It's awesome. We have the weekend. For us as traders, like the weekend comes and it's like such a bummer. It's like, I have to wait like 2 days to trade again. This is ridiculous. I had a roommate who traded the yen, and he always had the futures out and was watching it. And so, some people trade like overnight. People will trade trade the Asian markets from the U.S. overnight. You can, if you really are really into it, you can find markets to trade 24 hours a day these days. It didn't used to be the case, but you can actually do it now. But yeah, it's funny, as traders, we're like, the weekend seems like just like a waste of time, especially when you're like, you own options and it's decaying. It's like, oh, come on, man. Let's see. My fiance is pregnant. She's an ER nurse in LA. They ran out of wipes in the hospital. Wow, 2 shots. That's really, is that how I supposed to say 2 shots? That's, my best wishes to your fiance, and that's, you should be proud of her. The real heroes out here are the people who are like on the front lines. And, much has been written about this, that it's, who thought that like grocery store clerks were going to be like the real heroes there, or like, we need somebody that's running like the gas station, and the healthcare people are the real heroes as well. I'm sure we're going to get stories of, I think people like you and I could actually probably go out there and volunteer at these health places to help out. And maybe it's something that we should consider, being part of the solution here. I got this thing on Vimeo, and I'm actually going to link to it. And what it is it's a New York doctor, and he has like different information about the virus. And what he's saying is basically like, it's not as easy to get it through the air as they say, that like you really have to be exposed in the same room right next to somebody for like a half an hour to get it through the air. But it's very easy to get it like if you touch somebody physically at all and it gets on your hands, and you put your hands in your eyes or your mouth or your nose. Let me pull up this video. It was very interesting. It's just such a strange world now. I mean, who would have thought that we were so vulnerable? It seemed like we were like, beyond this kind of vulnerability in the world. I guess not. All right, let me give you a link to this video, but I thought it was interesting. It's this doctor talking about like what they're learning right now. And there's definitely hopeful people out there and stuff, but yeah, I mean, got to hand it to the people that are on the front lines here. So there's the video. Do we think extending the containment deadlines should impact the markets negatively? Well, it's a good question, Dominic, because on one hand, we know that people, we know that obviously the administration in the U.S. is focused on getting people back to work to jumpstart the economy and whatnot. But even if you look at it from just a truly, like, let's say we just look at things from a truly, like, we're money grubbing capitalists and we're just trying to make as much money as we can. What if we look at it from that point of view? It still might be unwise to stop social distancing too early, because what can happen is, like they say, it can make the whole epidemic worse, and it can hurt the economy more in the long run. So, it's going to be a tough call in the end, exactly when to lessen stuff. And I think it's going to come down to how, what kind of testing we have. And I don't want to go too far into a rabbit hole talking about this virus thing just because, every channel on YouTube is talking about it right now. And I don't want to get into politics either, just because I know people are sensitive about that. But there's certainly going to be I think the key is just being able to test people in the United States accurately and quickly to figure out how to do things. Because, any way you look at it, at some point, they're going to have to start stuff up again. And, what do we learn from all this stuff where they can just print money and stuff acts kind of irrationally? In the end, the market could do anything, it seems like, right? It could come back a lot. Yeah, that's a good point, Two Shots. It seems like, I don't know. I don't know if you guys watch H3H3 Productions. Check out H3H3 Productions. I'll put a link to his video too. He's showing people, like, in some states, like, out there partying. And I think people have pretty much gotten the message now. And certainly, parts of the population have been slow to get on board with this. I try to remain understanding of that, just because it is a hard thing to face. People are used to, like, the response when, like, there's a threat, like a terrorist threat, is to, like, we're going to be rebels against it. But the disease doesn't care about us being rebels or not. And the smart thing to do is to stay inside and away from people. But yeah, there's misinformation flowing. It's unfortunate. And it can certainly make things worse. I don't know if there's going to be like some reckoning in the end where they're like, oh, well, they should have done things differently or whatever. But I doubt there will be. I think that, history gets, it gets like told by those who are in power and whatever. All right, let me find this thing for you guys. Hold on. Yeah, it's hard to get too much into politics just because people get upset, and I don't have all that many followers, and I let me find this H3. It's pretty funny. Now, I don't know if you guys follow H3 that much, but he has this podcast, so he really hasn't been doing much of his normal channel, but you should check this out. It's pretty good coverage of like some of the idiots that we're dealing with here. I would hope that most of the audience here is a little bit more intelligent about things, but it's too bad that we weren't able to like all get on the same page here quicker. It's almost like totalitarian regimes are having an easier time dealing with this situation than us. And I know that there's controversy over quarantining everybody, but the thing is like, whatever saves the most life at this point, I think is like the important thing to do. there's people worried about an erosion of civil liberties, but that's not the argument here that's preventing people from being quarantined. The argument is just that the initial story that came out from the administration was this wasn't that serious, and people only heard that. And now when they try to kind of revise that and say, no, well, actually it is serious, a lot of people aren't hearing that message. They only heard the original message that, like, it's not that serious. And yeah, unfortunately, a lot of people don't pay that much attention to stuff, and they just hear from their friends. They're not watching the news. They're not like us. They're not paying attention like minute to minute at the numbers and all this stuff. They just kind of hear from their friends, oh, well, it's just like the flu, whatever. And that's unfortunate because as it's been reported, it's not those people that are going to die. It's like they're going to infect other people who are older people. The U.S. Is not like other cultures in that we don't revere our elderly as much as the people do in other countries. In the Far East, in Asia, people revere their elders a lot more and have a lot more respect for the old people. It's just preposterous when you hear these people saying like, "Oh, who cares about those people? Who cares about the old people?" Blah blah blah. I find it amazing. And for me personally, I am isolated. I haven't been with one single human being except my parents, and we are both in separate locations. And we figure if one of the two of our groups gets sick, the other one will take care of them. And we're practicing isolation. So if you can isolate, I know that people don't have the funding to do it in some cases, but we each have to kind of do our part, I think. It's hard to tell why their administration does things, and they're obviously being pulled by a lot of different forces. That's all I can say on it from here. I guess our job as traders is to try to figure out how this stuff is going to affect the market. And, it seems to me like the market's done really well in the last week, right? I mean, we're not going down that much anymore. We've had this big comeback. We got back up to 2,600 or something. That seems like we've done pretty well. So if I had to make a guess about next week, it would be that we give some of that back. Now, I don't think we're going to take out the lows, but it kind of seems like it's overdone to the upside at this moment. That makes sense, doesn't it? End of year. I don't know. What do you think? What do you think, Elk? We're just starting this year. I wouldn't be surprised if the S&P was right here at the end of the year. I wouldn't be surprised if it was right here. In fact, that would almost be a victory, I think, if it was right here. I just don't see it just going bonkers, and we're going straight back up and going bonkers. 3,400. All right. It's on the tape. Parallel elk. We're going to hold you to it and see what happens. Yeah, I don't know. That would be great. I plan on participating to the upside. It's just, I don't know. We'll have to wait and see. But we're holding you to it. And that's nothing new for me. If you follow me for a while, I never make predictions about the S&P because I don't know. The way I was taught to trade, it doesn't interest me where the S&P is going to go or whatever. I don't think about it really. I don't know. I know that the VIX is going to be lower by the end of the year. That's what I know. The S&P falls to 1,800. Oh, wow. It's possible. I think that some other major crisis has to happen for us to take out the lows. My personal opinion is that we don't take out the lows that we've made. But we'll have to see. We'll have to wait and see. I think we're going to kind of move sideways. But who knows? The reason why I don't think we're going to take out the lows is that, like, those who really, really wanted to get out of this market have already gotten out, I think. There's a lot of money in this market that's just rich people's money that's just going to sit there no matter what. And when you think about when you see those wealth disparity things where like X amount of wealth is owned by like the small top 2% or something like that, well, that 2% isn't taking money out because they'd have nowhere to put it, basically. And every week you've got people putting their paychecks, part of their paychecks, and obviously people aren't getting as many people are getting paid right now, but I wouldn't, some of this stimulus money is going to get put in the stock market. You better believe it. And every week, more people are being born on the earth, and there's only so many stocks. So, there's a limited supply of stocks, and there's more and more capital being made. So the market is eventually going to go up more. It's just the way it is. VIX around 60 this week. I would. All right. So you guys, it sounds like you guys are holding me to make some predictions here. I'm going to go with VIX makes it back down to 55 this week. But there's no way to tell. That's if you take anything away from me, what I'd like you to take is that there's no way to tell what's going to happen tomorrow. And I know that sounds completely obvious, but there's a lot of people out there that are new to the markets that just think that somehow there's some really smart people somewhere that know what's going to happen tomorrow, and they're always right. And they're like, oh yeah, of course it's going up tomorrow because X, Y, and Z. And they have they're just really smart and they know where the market's going to go every day. It doesn't exist. Nobody knows what's going to happen. There's so many variables that go into this whole market thing and so many different players all over the world that there's really no way to tell what's going to happen every day. I saw some stuff online talking about like we're going to get a virus, we're going to get a vaccine coming out really soon, and that's going to save everything. And it's like, I don't think that's kind of the way it works here. I don't think there's even a possibility of having a vaccine for like at least a year, from what I understand. So I think this thing just has to kind of burn itself out. I think the hope is just that we don't know that much about this virus, and hopefully like the warm weather like burns it out, or it just doesn't find its fertile ground to expand. But I don't think that like we can find like that there's going to be like some cure that we find and then we give to everybody in like the next month or something. I don't think that's even a possibility. Something's going to break. Big bubble brewing. So two shots. So you're thinking the VIX goes higher, is that, or you're thinking the market goes higher? I think you're saying you think the VIX is going higher. What do I think of Hedgeye? I would ask what have their results been in the past, because if they're able to figure out what's going to happen, okay, VIX lower. If they were able to figure out what was going to happen each day, I challenge them to show me the results. And there's another guy named. There's a lot of this stuff with this like computer learning stuff. There's another guy named Blair Hull. He's a very interesting guy who was with me on the floor. Had a huge firm which he sold for like $700 million or something like that. And he's got these computers that like predict where the market's going to go. And what they do is they let you actually look at their computer predictions, and what they'll be is like, it'll tell you to either be like double weighted the market, out of the market, or short the market and whatnot. It's very interesting stuff. But it's one of these things where like these predictions, a lot of times they don't do better than flipping a coin. It's like, that thing where like you have monkeys like throw darts at a list of stocks and it does better than like the market. It's that kind of stuff. But anyways, take a look at this guy. Very interesting. Put it in the chat. And you can actually look up on that website and they'll tell you every day what their prediction is. It uses all these indicators and all this stuff to come up with an idea of, well, we think the market's going to go up tomorrow or down tomorrow or whatnot. And they'll print their way out of vol. Yeah, that's perfectly possible. It definitely seems like having this stimulus package actually go through, even though it was obvious that it was going to go through, pretty much having it go through is a good thing for volatility. It brings vol in a little bit because it means there's less likelihood that companies are going to go out of business, right? We can probably agree on that. I'd love to see the VIX come in this week. I just don't know if it's going to happen. And, what I want to happen isn't necessarily going to happen. So there it is. Have you ever checked their tracker? Actually, I haven't. I know that the funds that Carl, I know that the funds that they have based on that computer learning haven't done super well. But beyond that, I haven't tracked. I haven't looked at the data to check their track record on there. No, I haven't. I'd be interested in that Hedgeye firm that you're talking about. If you have more, a link to them, obviously I can Google it, but I'd be interested if you have more information on that. If you could leave it in the comments below, that would be interesting. I'm certainly game to learn more about this sort of thing, but I find it when somebody comes in and says, when I see somebody in StockTwits or something and they say, Tesla's definitely going higher tomorrow, you guys are idiots. And when someone says that, they're making a guess. And when they don't realize they're making a guess, they come across as not being very bright. And you see, on YouTube, you see it all the time. People usually betting the market's going down. They're like, it's the beginning of the end. And they'll show like a tidal wave like coming over New York, and they're like, buy silver coins and get, the zombie apocalypse is coming and blah blah blah. To me, the more odds-on bet is that volatility comes in, and it's certainly not as exciting to be short vol. It's much more exciting to like buy TVIX and be like, yeah, we're going to 1,000 tomorrow, blah blah blah. But that adrenaline rush, excitement, that comes at a cost, and the cost is that like you're kind of when you're buying volatility, that we're at a very high volatility right now with the VIX 65. And even when you consider, well, you're not buying the VIX 65 with TVIX, you're buying the futures 55 and 46, it's still a very high level. So you're playing with fire being long these products. And I would rather do stuff that has more probability of success. And for me, the probability of success is intelligently shorting volatility right now because we know it's coming in. Best of luck to everybody. Thanks for coming on. I appreciate those who got memberships. If you can afford the $1.99, then jump in and grab a membership. It's not a big deal if you can't. I appreciate people just coming on. I love getting comments. It's great to have people active in the chat. That's really exciting for me. I'm going to have to lose this goatee because I don't like freaking being gray. But, don't have to wait that much longer for the week. So just to summarize here, E-minis down 50, NASDAQ down 124. It looks like we are headed lower as we go into the week. I would recommend put spreads as opposed to other ways. Yeah, Carl or Master, I don't like, I've never actually shorted UVXY, TVIX, or VXX. The strategies I use are either selling call spreads, buying put spreads. I have sold naked calls before. I'll trade calendar spreads. I use options trades to short volatility. That being because my background is as an options market maker. I was an options market maker in equity options for 12 years in Chicago and San Francisco, and I was an options market maker in 10-year and then 30-year bond options at the Chicago Board of Trade. And thus, I love looking at options. I feel comfortable with it. I don't like shorting like a TVIX because then if it goes from, whatever, you don't know how much you can lose. I like trades where I want to know what's the most I can lose. And with options, I can set that up so I can know what the most I can lose because I don't want to go negative. I don't want to owe somebody money. I had that happen before as a firm trader. I owed somebody like 200 grand. And I don't want to work while I'm paying back my 200 grand. It's not fun. And I would recommend for you guys the same thing. Market makers can make money from the bid-ask spread. We can make money just by managing our positions the best we can. Market makers make money by moving price, right? So if people are selling us volatility, we lower prices. Some people are buying stuff, we raise prices. The more we can move markets and move price, the better a chance we have of making money. In this day and age, as a market maker, this stuff is not very wide most of the time. So and people expect you to trade with them mid-market. So in this day and age, it's harder to make money on the bid-ask spread. Really, that's kind of a thing of the past. In these days, you have to basically whatever positions you're left with, because as a market maker, what you're doing is you have to be counterparty to the public, or whoever's trading with you, whether it be the firms or the public. And so if people want to buy something, you've got to be the seller. The only thing you can control is kind of what price you're selling at it, maybe a little bit. And you use pricing to, attract a position that you want. It's a complicated game, but it's one that taught me a lot about trading options, because I was always stuck with like the worst positions in the world, and I had to figure my way to weasel out of them and make them into gold. How I became negative was I wasn't actually in debt. What happened is that I made the way my bonus structure works is that like you get quarterly bonuses. So I made a bunch of money in the first quarter, and then essentially it was in 2000, and I had a really good first quarter, and I made about $2.5 million. And then I got paid a bonus of about, I don't know, it was like 300 grand. And then I managed to lose a lot of that money. So I gave back like $2 million in the rest of the year. So they shouldn't have paid me the 200 grand in the end. They should. So basically at one point I was up $2.5 million. So they paid me a bonus of like 200 grand. Then I ended up giving back like 2 million of that. So I was only up like 500,000 at the end of the year. So, nobody had lost money, but I ended up, I got a bigger split than I should have compared with my backers. And so I ended up owing them money back. So it took me, 6 months of the next year to actually make the money back that I owed them. So I was never negative. It's just, if they had a different timing of paying out bonuses, they just wouldn't have paid me that money, and then I wouldn't have owed it back. But I was kind of happy the way it worked out, because I got a big check, and I'd rather have a big check and owe somebody to pay them back than not, right? So just the way it works sometimes. Being a market maker it's kind of like running a taxi, in that you've got to pay that seat lease. So you need a membership. So it's kind of like having a taxi medallion. So you've got to pay. I would lease a membership, lease a chair, a seat on the exchange, and a seat, and it was anywhere between $5,000 and $10,000 a month to lease a seat. And so you have a lot of expenses that you have to cover, and that's what can get stressful as a market maker. Like my expenses at the SIBO were getting upwards of over $200,000 a year just to break even, pay my base pay and whatnot. So it can be stressful, certainly. Anyway, thanks guys for tuning in. I appreciate all the support, and now we're off the lows. It doesn't seem like that big of a deal. The Dow futures down 324. It's like it doesn't seem like that big of a deal. It seems like it could come back right away. It kind of seems like we're just going to leak lower slowly, but we can leak lower slowly and still have vol come in. So we'll see what happens. Do you need enough cash for 100 shares when you exercise an option? Dakota, generally in equity options trading, nobody exercises an option. Maybe it comes to expiration and the options are in exercise, but usually you're not going to exercise an option. You prefer to just sell that option out, because usually there's some sort of premium in that option over its intrinsic value. So for example, really quickly, if you have a stock that's $35, if you have a stock that's $40, if you own one of the 35 calls, right, stock's 40. If you own one of the 35 level calls, the intrinsic value of that call is $5, because stock's 40, it's a 35 strike. The difference between 35 and 40 is $5. So, but the 35 call is going to be worth more than $5 on the screen because there's the implied value of the put is also in that call, and there's other fluff on top of that price. So it generally never makes sense to exercise a call unless there's a special dividend or some dividend coming up that's greater than the fluff that's on top of that call. So most times when you're trading options, you're going to sell out a call before you exercise it. But yes, if expiration comes and you have deep calls, you need to have the amount of money, because that's what an option is. It gives you the right to buy the stock at a certain price. So if you've got this right to buy the stock, but you don't have the money to buy the stock, then it's not going to work. You could try to manipulate the future, but the problem is that it's a pretty thick market. And what happens if you buy a bunch of futures to try to manipulate it, and then you run into a brick wall? Like Morgan Stanley's like, oh yeah, or Goldman Sachs. You're like, oh, I'm going to buy, not that as much as trading. If I buy 50 futures, I'm going to move it up. What happens if you buy 50 futures and then Goldman's like, yeah, I'll sell you 1,000? Then you're just kind of stuck. So it's a possibility to manipulate things, but even if you have really big money, there's usually someone bigger around. In like coordinated manipulation of it, it's just very tough to do. The most you've made on a trade. I mean, a lot of what I was doing as a market maker was like positions that got built over time. The most I've made in a day is like a little over $250,000, which is pretty close to the most I've lost in a day. Sometimes, I had one time where like I was, like I slept late, and this was before we didn't have that many cell phones. I had a pager, and I slept late, and I was getting paged. And they called me and they're like, oh, you got to come in. I was like, what? Something's wrong. And they're like, no, you made like 200 grand and we have 50,000 shares to sell right now. We want to know if you want to sell it and lock in the profit or not. Which, it was exciting. That was a fun time of my life. It was a long time ago, though, if you think about it. I mean, I'm 46 right now, or I'm sorry, I'm 47 right now. And that was back when I was like 22. So it seems like a long time ago. But there you have it. There it is. All right. Thanks for watching, guys. This one went a little long. I do have an interview with David Modell, which I'm going to try to put up probably tomorrow morning. It's kind of interesting just getting his insights and stuff. Appreciate everybody coming on. Thanks to all the new members, and hope you guys make money this week. Let's make money together. That would be the best.